Welcome. We're now at the end of July and 45 weeks or 10 months into our Bitcoin dollar cost averaging experiment. And with stocks and Bitcoin both near all-time highs and altcoin season firing up, I'm posting this quick update video on how Bitcoin is holding on to its title as the apex predator store of value asset. This will be an eye-opening whirlwind tour. So don't blink, hit that like button, and let's get started. So let's begin with the Bitcoin price chart going back to September 16th when we started our experiment. And this chart clearly shows Bitcoin living up to its roller coaster reputation. I won't go into details, but Bitcoin price has been affected positively by growing adoption, and it's been affected negatively by trade wars, inflation fears, and rising geopolitical tensions. Though overall, the Bitcoin price has risen 126% over the 10 months, it has not gotten there smoothly. Now, nobody is going to complain about a 108% pump over 92 days to an all-time high of $108,000. But what about this stomach-churning 32% dump over 77 days from $109,000 down to $74,000? Now, any seasoned Bitcoiner is going to always tell you to zoom out and don't be distracted by the daily, weekly, or monthly price movements. And this is where the power of dollar cost averaging really shines, since you don't have to find a crystal ball or override your emotions. Because more often than not, when the price is dumping, you're not going to be in the mood to buy. And when the price is pumping, you're going to feel like it's too pricey to buy. So now let's drill into how our disciplined DCA investing approach has performed. So this table shows each of our weekly $25 buys. Now, I can't really do this when Bitcoin price has been dumping, but today with Bitcoin price near all-time highs, we can scroll down and see that pretty much all of our buys are in profit. All with the exception of a couple weeks ago when we bought with Bitcoin price almost to $120,000. So that one's down 48 cents for that buy. But overall, we've invested $1,325 and we've acquired 1.6 million Satoshis, which is 0.016 Bitcoin, at an average spot price of $82,733. Now with Bitcoin near $118,000 right now, that's a 43% gain over the 45 weeks, or on an annualized basis, that comes out to 50% return. So that's a phenomenal return that we're seeing for Bitcoin, but how does that compare to other options? So let's take a look now at Bitcoin versus some of the more popular investing options, and I'm calling out stocks as the S&P 500 index, Nvidia, which is the darling of the Magnificent Seven stocks, Ethereum, which is the number 2 market cap cryptocurrency, and then gold, which is a proven store value asset since the beginning of time. And here you can see, going back to September 16th, the period of our experiment, that Bitcoin is on top with 85% return. Nvidia is next with 52. Ethereum has a 46% return. Next, we have gold at 26%. And last but not least is S&P 500 index with 12% gain. So that was over the 10 months of our DCA experiment. But remember, we always want to zoom out to see proven long-term performance. So let's go back 2 years to about late July. Bitcoin is on top with 302% growth. Nvidia is next with 278% growth. The next is Ethereum at 102%, gold at 69%, and again in last place is the S&P 500 index up 39%. So honorable mention to gold, which has been outperforming stocks for the last couple years. Now, Bitcoin came in first over the 10 months. It came in first over the 2 years. Let's actually zoom out. I just want to show you going back to 4 years ago. And if you look at this, Nvidia is actually up 873%, which is amazing. Bitcoin is now in second place with 271. Ethereum at just under 100%. Gold at 82. And wow, gold is still beating stocks at 47% up for stocks. So here's an example where Nvidia is beating out Bitcoin. If you did have a crystal ball back 4 years ago, you might have loaded up with Nvidia stock and you would definitely be ahead of Bitcoin. But you'd have to decide if you think you could have gotten lucky picking an individual stock 4 years ago. So to wrap up, I just want to call your attention to some of the high-level narratives that are driving Bitcoin adoption this year. And I know some of you are thinking about dollar cost averaging and you want to have some assurance, like, why do we think that this is going to continue to go up? And the first thing we'll look at is the M2 money supply, which is a key measure of global liquidity and how much money is being printed by the world's central banks. And Bitcoin price has proven to be correlated to the M2 supply with an approximately 80-day lag. And what we see here is that the M2 is pumping with no end in sight, as highlighted by Vivek's X post here. And from this, we could reasonably infer that Bitcoin will follow the M2 supply and even pump as high as 150 and more over the next few months. The next narrative I want to call out is the US regulatory environment. And with the new administration, the House and the Senate are all very much more favorable towards Bitcoin and crypto. And even though it's not a quick process, we did see that back in March, the president issued an executive order to establish the Strategic Bitcoin Reserve. They're trying to enact some bills to make that more permanent legislation. But then since then, several other bills have been introduced to both the House and the Senate. As recently as just this past month in July, the Genius Act was passed by the House and Senate and signed into law by the president. Two other acts, the Anti-CBDC and the Clarity Act, both passed the House and are now with the Senate. And then lastly, the Responsible Financial Innovation Bill had been drafted by the Senate, was released just recently on July 22nd. So we see that it's just a matter of time before the new administration is making good on their promise for the US to be the Bitcoin capital of the world. And the last narrative I want to look at is the corporate adoption. And we see that global corporations are following Michael Saylor's playbook and amassing a Bitcoin as their key treasury asset. And this is a post by HODL15 Capital on X, and it shows how each week more and more companies are announcing that they're starting to accumulate Bitcoin or they're adding to their Bitcoin treasuries. And over the past week alone, 22 companies increased their HODL position by 52,000 Bitcoin total, which is worth over $6 billion. So the corporate appetite for Bitcoin appears to be insatiable, which is just one more reason why we expect to see an imminent price pump as Bitcoin supply gets squeezed. So those are some of the key narratives driving Bitcoin adoption and price over the next several months. Now, we looked at Bitcoin and how it outperformed most other desirable assets over a few different periods. We did see that Nvidia outperformed Bitcoin over the past 4 years. And to be sure, you can always cherry pick timelines and individual stocks or even smaller cap cryptocurrency like Ethereum or Solana and even gold that might have outperformed Bitcoin over periods of time. But just remember that none of these assets has the unique attributes that make Bitcoin the apex store of value. Over the past 16 years, Bitcoin has established itself as the most secure, scarce, decentralized, and non-sovereign form of money, which is why corporations, institutions, and governments are racing each other to acquire it as they build up their treasuries. If you're watching this, you have the opportunity to claim your own share of the future global reserve currency, and that share will never be debased or devalued as we see happening for every fiat currency issued and controlled by central banks. So be sure to take action to protect and grow your family's wealth. The first step is to always learn more. If you haven't already, watch my series on why you can't afford to ignore Bitcoin. And when you're ready to buy, check out my buying guide playlist. Thanks for watching. Be sure to like the video, comment below, and share it out to those you love. Until next time, be wise, be safe, and stack sats.